The backdrop here, I would say December retail sales are absolutely fine, especially when you put it together with November. Holiday sales in total, on a one-year normalized basis, were up 9%. That's actually the best holiday in nearly 20 years, and that's lapping last year, which was up 8%. You had holiday pull forward into November, number one. You had the Omicron variant, number two, which impacted store traffic as well as store staffing, in addition to merchandise inventories, which were increasingly bottlenecked at the end of the holiday season. So, look, we had 10 retailers in the last week for management access here at JPMorgan. The underlying tone on the U.S. consumer exiting the year is actually very robust into next year. Now, one thing we are watching, and we can get into it if you want, is I do see 2022 more so as a tale of two halves, and that's tied to some of the inflationary costs, more on the expense side. But from an underlying consumer perspective, I think we exit this holiday in a very robust position.
So I do want to get into that a little bit more, because that's interesting to me, given the fact that we do know the consumer, by so many metrics right now, is so strong. You've got some of this fiscal cliff stimulus money that's being pulled back, the latest, the expiration of that child tax credit. And then, of course, those higher prices that you just mentioned, with inflation outpacing wage gains. So who's best positioned in your coverage universe to benefit from this dynamic this year? Where should investors be putting their money to work in the sector?
So we cited in our 22 outlook an interesting statement, I thought, that in my opinion, there are many retailers that will exit the pandemic and find that it's actually harder exiting COVID than it was entering. You have wages that are higher. You have inflationary raw materials that are higher. You're lapping stimulus in the front half of 22. And on top of it, the supply chain is likely not cleared until the second half of the year. So that's the tale of two halves that we see in the front half versus the back half. I would say on the inflationary front, best positioned, in my opinion, would be value destinations. That to me is dollar stores, off-pricers. That's actually who was taking share before the pandemic. I think you saw market share acceleration during the pandemic. So that would be your Dollar General, your Dollar Tree, Five Below. I would put Burlington, TJ Maxx, and Ross Stores also in that camp. And then I think the second theme as 2022 plays out is thinking about the next leg, which to me is global mobility, global tourism. We haven't really seen any of that kick in. That could be a back half of the year dynamic, depending on what the next leg of this virus is. Where we're more concerned, I would say, is discretionary spending without a catalyst. So it's sort of the caught in the middle models. I would put mid-tier department stores, and I would say it's more of a mixed bag with specialty retail.